Hey everyone, welcome back to Corporate Decoder, the place where we untangle those mind-numbing corporate filings so you don't have to. Today we're diving into a semi-annual report that's supposed to give shareholders warm and fuzzies. I'm talking about Natixis Funds Trust, but will this report leave shareholders feeling flush or something else? Let's dig in. This report, covering the first 6 months of Natixis Funds Trust's fiscal year, is a snapshot of how the Loomis Sales Core Plus Bond Fund is performing. We will go over some key fund statistics, how they invested, and what it all means. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss this with other investors. First things first, let's set the stage. This report covers October 1, 2024 to March 31, 2024, to March 31, 25 kind of deal. Remember, you can find more detailed info about the fund draft kind of deal. Remember, you can find more detailed info about the fund online. So we are hitting the highlights. Let's talk money, specifically fund costs. The report highlights costs based on a hypothetical $10,000 investment, which is a good way to compare different funds. Class A shareholders paid $37, which translates to an expense ratio of 0.74%. This expense ratio is what the fund takes out annually. Class C fees are about double that, something to consider before deciding which share to own. Alright, let's get into what the fund is actually holding. As of March 31, 2025, Loomis Sales Core Plus Bond Fund is overseeing a sizable chunk of change, nearly $7.9 billion. They are also actively managing this portfolio, as we can see from the portfolio turnover rate of 76%, meaning a significant amount of assets changed during the year. Here's where things get interesting. Where did your money go? Almost a third of the fund, 31.6%, sits in treasuries, meaning US government debt. Another big chunk, 23.3%, is tied to mortgage-related investments. So almost 55% of your money is in what would be considered relatively safe assets. Looking at credit quality, about 29% are in US Treasury, which is as safe as it gets. A lot more is in AA-rated investments and not rated but rated securities. Okay, big question. Were there any significant changes in how the fund operates? According to the report, no. There were no material fund changes during the period, which can be good. It means no surprises, but also bad, since they didn't make any material changes. Now, let's zoom out and give my take on what this filing reveals about Natixis Funds Trust I. I like the fund's focus on treasuries for safety, though it might limit the fund's returns compared to peers taking bigger risks. This is a fine fund for those who want moderate risk. Ultimately, this report paints the picture of a stable but not exciting investment. The expense ratios could be better, and the lack of major changes might leave investors wondering if the fund is truly adapting to market opportunities. But that's just my take. Now I want to hear from you. What are your thoughts on Natixis' Loomis Sales Core Plus Bond Fund? Let me know in the comments. If you found this decode helpful, make sure to hit that like button and subscribe so you don't miss our next dive. And don't forget to join our Discord for more in-depth discussions. Thanks for watching, and I'll see you in the next one.